So today we are here with Toorak Capital Partners, John Beecham and Tim Marsh, who will talk us through the company's funding appetite and outlook for the UK bridging market in 2021. So my first question is, what are the key challenges you've seen in the bridging market and what have you seen the market face in 2020, and how has Toorak helped mitigate them? And also, what challenges do you expect the industry will face in 2021? John, do you want to kick us off?
Sure. Hey, thanks, Beth. It's great to be here, and great to be here with BNC talking about the bridging market. This year has been a year unlike any other. We have faced challenges across a wide range of elements of our business, starting from how do we react to the COVID crisis? What do we need to do with borrowers? How do we treat them fairly during this period of time? How do we grant payment holidays in a way that's equitable and reasonable across people, and do that really quickly? And we saw ourselves and a lot of our partners had to shift a lot of their staff over from production over to asset management, during those early months, and people had to, make a lot of decisions on the fly. I think as a whole, the industry got through it relatively well, but had to make a lot of quick decisions. You had that as number one. You had number two, which is, what does it mean if you're doing a, bridging loan in this market? What happens to the real estate market? I think it's turned out a lot better than people had thought. Certainly at the beginning of the year, certainly during the beginning parts of COVID, in terms of having a really strong housing market, having the real estate market do well, frankly, much better than we had thought when this had started. So that's turned out to be better than we expected. But certainly was a challenge to figure out really what that meant for the industry. I think number three is for the refurb element of our business, what does it mean to be in a lockdown? Can work get done? Can people get to the office? For when you're selling properties, can people go out and look at properties and ultimately buy them? And so the practical reality of that had a big impact on our market as well, which really, we had to deal with, and a lot of our partners had to deal with as well. And then you had the question of, okay, well, what does it mean, for the bridging market on the way out? When now we're, really starting to focus on growth and growing a lot, but, when do you start going again? When do you sort of build up your business again? When do you really focus on growth? And I think that's something that we and the entire market had to focus on over the course of the year. So I think there's been a ton of challenges that we've had to figure out collectively as an industry that we've all worked together to really get to the best point over the course of the year.
And would you add anything to that?
Yeah, I think from a UK perspective, certainly we've seen transactional timelines go out a huge amount over COVID, and coming out of COVID, we've seen kind of valuers and solicitors have had to furlough staff or let people go, and it means that they're running at reduced capacity, and their ability to fulfill the industry needs has been stretched over time. And I think there's some nervousness about scaling back up from a staff perspective, because not everyone's sure what the removal of the government's fiscal support is going to look like come next year. So I think until the vaccine's fully rolled out in early 2021, a lot of the industry has just had to try and adapt to that new environment and work out ways of overcoming adversity, if you like, in a short space of time.
In terms of capital, in terms of Toorak's role in the industry, we've had, we think, a pretty big impact in the UK industry over the course of the year, because I think this crisis has made a lot of lenders really question how they're funding themselves. How stable is their capital? How stable are the bankers who are lending them money? How have they acted during the course of the crisis? And make sure that, I think a lot of people have realized, it's frankly been very beneficial to us, that having a diverse set of capital partners that have capital to be able to survive a variety of different crises is really, really helpful and really valuable. And that's caused a lot of people in the industry to sort of question what they were doing in the past. How stable is their capital? Do they keep funding during crisis time? Are they there for us in the good times and the bad? And that's led to us, frankly, growing our business very substantially over the course of the year in the UK, which has been great.
What do you think the bridging lenders in the UK need to do over the next 12 months to ensure that they remain successful during these uncertain times? And I know you kind of mentioned there earlier, Tim, that lenders are going to be quite stretched if they have had to reduce their teams.
Yeah, I think it probably speaks to John's last comment, which is consistency of funding and that ability to be very predictable from a market-facing perspective, them to deliver consistently their product to the market, both borrowers and brokers, because it's a hugely kind of broker-led industry, is really, really important. And I think, we'll also see behind that, the other things that become very important will be technology. It's going to play a large part going forward for a lot of lenders, and their ability to embrace all the different kind of products that are out there now, like open banking and Nevo and stuff like that, will really help them.
And I think we're seeing this in the U.S. and the U.K. frankly, that nothing like a crisis to make you question what you're doing and make you analyze what your assumptions were before and really think about things. And that applies to a lot of areas of the bridging market. I'm sure we'll talk about a lot of them today. But one area in particular I really want to focus on is real technology. Our industry has worked in a way that's very personal, very frankly antiquated in both markets, in terms of how we close loans, in terms of how we value properties, in terms of timeliness, in terms of the physical sort of reality of this. And there's nothing like having a crisis or something like COVID to make us really question, hey, do we need to go do everything in person? Do we need to be shipping around physical documents to the extent we do? Can we do more things virtually? Can we do more things electronically? In a lot of ways, the UK has done, frankly, a better job at some of that than the US at the time. But there's still a long way to go in terms of adapting our business practices to increase efficiency. So I think, absent a crisis like this, there's really no impetus to sort of think about that. And so I think a lot of bridging lenders really focused on what we can do as an industry to improve our operating practices in the future to make it more efficient for everybody.
You obviously mentioned quite a few positives in terms of technology and how that's helping to advance the industry. What other positives do you see come out of this 2020 that you hope bridging lenders will capitalize on in 2021?
Yeah, well, what's the biggest positive is the stability of the housing market. So let's all be thankful that we're not doing small business lending or consumer unsecured or a lot of cruise ship lending or a lot of other businesses that have been much more impacted by this whole crisis. So I think we should all be thankful that we are focused on an industry that's been very resilient. It's fundamental to the economies of the places that we work, and has also proved to be lasting importance and very stable. So I think that's something that's really super exciting for everybody. I think number two is really the opportunity as an industry to sort of expand our products. We see many of the lenders we work with, focus on either bridging loans or refurb loans or, in some cases, buy-to-let loans or various hybrids of these different products. And what we're seeing over the course of this year is this time down, the time that's going to be introspective, has really made a lot of lenders question, hey, why am I not doing this product or that product? How do these other things? And it's allowed them to think about how they can expand their business and serve their customers better. Because what we see is that a lot of the lenders who are the most successful in the market are lenders who solve the needs of their entire customer base. So it's not just one product, it's not just one solution for their customer. It's a whole gamut of solutions. And so many of the lenders that we see that have been really dynamic are using this opportunity to address that, add new products where appropriate, and sort of expand their business. I think it's going to be a lasting impact that it's going to occur for a lot of lenders in the market.
As a result, do you expect to see more of this kind of life cycle lending proposition to become more of a thing in the bridging market?
For sure. And we've seen this, happen in the US already. And we expect that to happen in the UK pretty substantially over the next year or two. As lenders realize, hey, I've spent so much time and effort. It's hard to get customers. It's hard to get them to the point where they're actually dealing with you. And once you have that customer, being able to go offer the second and third, in some cases, fourth product to that same customer is a lot cheaper than going to acquire that customer 5 and 6 times. Those customers are likely to close their loans. Those customers are easier. You've already underwritten them, so they're good from a credit standpoint. And so those are the ones you really want to focus on. And so I think having this, broad-based, set of products that bridging lenders can offer to their customers, just makes a lot of sense.
Mm. Tim, in terms of demand, supply, attitude, and innovation, what are the biggest changes you've seen in the bridging market over the past 12 months?
I mean, the major changes, I would say, are kind of COVID driven. You've got a huge amount more of kind of valuation uncertainty. You're seeing valuations come in at different levels. And, the valuers have got a hugely difficult task coming out of lockdown with very little recent data to pin their hats on. It's very difficult for them to kind of lock in values. The other changes we've seen is that we've seen refinances taking a huge amount longer than they were pre-lockdown. A lot of the big institutions and high street banks, their operational expertise has been stretched massively by being, if you've got 1,000 employees, they're now working from home. It's very difficult for them to operate in a normal fashion. So we've seen that kind of exit route for a lot of lenders being slower than it should be. But again, on the positive side, you've seen things like the land registry, which is extremely antiquated, be forced to adapt into, you know, modern world. And we've seen our first kind of virtual completions on the kind of reg and non-reg side. And so all of those things and pushing people to use like Third Fort or Nevo and helping to, you know, the whole industry to innovate. And I think because it's a very entrepreneurial environment, you know, the people that run these businesses are very open to adapting and trying to push things, you know, to make sure that they can run their businesses effectively.
John, do you predict there'll be an increase in institutional funding in the UK bridging market in 2021 and a reduction in private and high net worth backing? And what impact will this have on the lender landscape in terms of market size and standardization?
Well, the answer is yes. So back up a little bit. If you look at the bridging market in the UK, and frankly in the US as well, it's pretty anomalous in the scheme of the broader mortgage market. No other element in the mortgage world has individual lenders determining their own loan documents, determining their own credit standards, and having such a homogenous or lack of homogenous kind of approach to underwriting across the industry. It certainly isn't the case in regulated mortgages, certainly not the case in commercial mortgages. So you have this kind of part of the center that's operating very differently, and largely because individual lenders historically, unlike the rest of the mortgage world, have had high net worth funders, have had private funds in which have funded their loans, which has sort of enabled this. But if you look at this from a holistic standpoint, that means a lack of standardization, lack of consistency across the market means there hasn't been as much institutional presence in the market over time as you see in the rest of the mortgage world. So this part of the industry is frankly different from the rest of the industry. So as we look forward to what Toorak is doing, what other people are doing, we've seen a couple of things. Number one, as I mentioned, originators have really learned, especially during COVID, to value diversity and stability of funding. So a lot of the funding they had in place maybe wasn't as stable as they thought. And so having, you know, real well-capitalized institutional funding partner like Toorak has helped a lot of our originators, and we see a lot of demand for that. So that's number one. Number two, it's obvious to us that the advantages of funding on scale and diversity are much better than funding individually. We have the ability of funding all around the United Kingdom in terms of geographic diversity, in terms of originator diversity, in terms of product diversity, in terms of borrower diversity. And once you have a very diverse and consistently underwritten pool, we're able to finance that much better than any individual originator could by themselves. And so that really ends up being a win-win proposition because we can partner with originators. They know their customers. We don't aspire to be a lender or have customers know who we are from that standpoint. But they know their customers, they know their markets, they know how to get deals done. And we're good at the financing side. And by partnering together, we ultimately end up with a win-win situation. So we think we've already seen that happening, and that there's been a shift towards institutionalization of the market. We expect that's going to continue, frankly, and accelerate over the course of the next few years as we continue to penetrate the United Kingdom and others, you know, other banks and other funding sources also sort of come in. So we think, you know, we're in the middle of a relatively long process to sort of shift from a primarily individual high net worth funded business model towards an institutional model. And we think that's going to continue over time.
The bridging market's been kind of set for consolidation for a number of years now, and we haven't really seen much kind of marked change here. So even pre-COVID, you know, we expected to see some M&As or acquisitions happening. Do you expect to see consolidation actually happen in 2021? And what sort of lenders do you expect will leave the market or be invested in or acquired?
It's a difficult one to answer because I think if you hadn't had the backdrop of COVID, you might have seen some consolidation in 2021. I think off the back of it, it's difficult to attribute much of a premium to a business where the book runs off inside 12 months. So you have to look at the lenders where they've added enterprise value, or they have multiple different product streams where they've got kind of longer term lending, and that diversity will make them more attractive, I'm assuming, to being acquired. But I think you may see if yields tighten up again, you know, Q2, Q3 next year, we might start to see some of the smaller lenders get marginalized as their returns get squeezed. and they might pivot into, moving up the credit risk curve and into kind of second charge or whatever it might be, in order to try and achieve the same kind of returns that they've historically achieved in bridging. And it's all part of the institutional kind of funding that's coming into the market, and that standardized process, which makes, the returns get squeezed over time, unfortunately.
Mm. And John, I know you mentioned this in depth actually in our interview for the Bridging Commercial magazine, but how do you expect the role of a bridging broker will change in 2021? I'm sure you've probably got some interesting comparisons with the US market.
Yeah, it's sort of interesting. As a person who spends a lot of time in both markets, obviously I'm based in the US, but we have a very large presence in the UK, and it's been a huge amount of time there, both physically and sort of from a focus standpoint. You see a lot of differences, and there's a bunch of differences between two markets. One of those is really the importance of brokers in the UK. So brokers control a much higher portion of the bridging market in the UK than they do in the US. And their fees and margins are also frankly much higher in the UK than they are in the US. That I'm not sure what the reason for that or the historical sort of reality of that. That's sort of true. By the way, when you think about consolidation, the question you asked before, to the extent that people actually control their own customers, that's ultimately sort of power in the lending world. So the value of companies ultimately control their customers and have direct access. It tends to be higher than the value of companies that sort of bid through brokers to get business. So that may have an impact on, M&A consolidation can help you find. But back to sort of the role of brokers. So I would expect over time, the natural evolution of things would be that you would have more companies go off and form some sort of direct-to-consumer business or direct-to-customer business, probably a better term, bridging market, where they go and sort of directly market to customers and create some competition for sort of the broker market, which probably in the US, my sense is like it's, I don't know, somewhere around 50-50 or 60-40 sort of mix of kind of brokers and consumers in the UK. It's much more weighted towards brokers. So ultimately, competition is good for every market, and I don't think sourcing of mortgage loans is really different than anything else. So I'd expect over time to be an evolution towards more diversity in terms of how bridging lenders go and find their business.
And Tim, what opportunities do you foresee in the UK bridging market in 2021, and how will this impact Toorak's appetite?
So I think the fact that the high street banks and some of the challenger banks remain withdrawn from being, active in this space has created more room for, the bridging lenders that we work with to grab more market share. And I think that's going to definitely be an opportunity that we see carry on into 2021. There's some discussion in the government about loosening planning laws around commercial conversion and about permitted development rights. So I think again that will help Toorak and Toorak's partners greatly, because it's a section of the market that we're very focused on. So they're probably the two kind of key areas for 2021, I would have thought.
Well, I agree with what Tim just said, and I think we see a lot of opportunity in the UK to continue to expand our presence there. As I mentioned before, the demand from our lenders to continue to grow their origination books and continue to expand the scope of what they're offering their customers is really unlimited at this point. And so we see a lot of opportunity in the UK. We believe, the housing market is doing very well there, and so we feel good about the near-term prospects for housing over there, and want to expand our capital commitment over the UK over the course of 2021 because we see a lot of good partners we want to go work with, and frankly want to expand our relationship with our current partners as we go into the next year. So it's a big opportunity for us. It's something we're really